Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures, shares of stock, or options depending on the asset and the way you want to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Anurag. Stephen, welcome. Glad you're here. Hello, Horsepower. Welcome. Glad you're here. Horsepower asked if I could look at NDX. I normally do not look at NDX. I'll show you what I look at for NASDAQ. Like I said, NDX is not very liquid compared to QQQ. And I think QQQ is a much bigger driver of NASDAQ options trades in QQQ. So unless you have a very specific reason for just wanting to look at NDX in isolation, I like to look at, I'll show you two different hero signals that we can take a look at for the NASDAQ. Now, as far as Bookmap goes, you cannot show NDX in Bookmap. You can't trade NDX itself. So we'll take a look at the NQ in Bookmap. All right, let's move on. Here's my agenda for today, Wednesday, July 10th. First of all, I want to cover news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with economic data. Today was Jerome Powell's second day of testimony, his biannual testimony before Congress, before the Senate yesterday, before the House today. And then tomorrow, the CPI data comes out at 8:30 a.m. Eastern Time. That could be a market mover. And then Friday, PPI data comes out, also at 8:30 a.m. Eastern Time. And then Michigan Consumer Sentiment at 10 a.m. And also bake earnings begin on Friday. All right, so that's economic data and events for the week. Let's move on to positional analysis. I'm going to start with the SP 500. This is the ES Futures and Bookmap. And I'm going to, before I take a closer look at this chart, take a look at a higher time frame. I'm going to go to the underlying index. That's SPX. We've all seen this chart before. One-day chart. This is Thinkorswim showing a one-day chart. Huge rally that began last year. Correction began this year on April 1st. Rally resumed the Monday after the April options expiration. That's shown by this red vertical line here. A little bit of a pullback after the May options expiration. Rally resumed. And then a little bit of a consolidation around the June options expiration. So this April options expiration was slightly put dominated, and this June expiration was heavily call dominated. So the options expirations are often marked pivot points or level areas of our time period of consolidation or reversal. And then the rally resumed around July 1st. So let's pick that up now with a 1 hour chart. Still looking at SPX, again a 1 hour chart. This is a 30-day 1 hour chart. Here's the June options expiration. That line may be difficult to see. So that was the consolidation around the options expiration. Then the rally resumed July. This is July 1st, July 2nd. And SPX continues to make all-time highs. All right, let's take a look at the levels on this chart. First, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. That's based on the closing price for SPX from last Friday. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price of SPX from yesterday. Note SPX is trading well above the upper daily expected move today, also trading above the call wall. I'll talk about that in just a minute. And I note I do post those expected move levels in Discord every day the evening before. All right, let's take a look at the Spotgamma levels on this chart now. These are the dark red lines. I'm going to point out the key daily levels. First of all, here's the put wall at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 55.45. That is Spotgamma's proprietary volatility flip level. Below that level, our market maker's position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their yield exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading L, market makers are position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And generally, in a positive gamma environment, I'm looking for more mean reverting price action. And if the market is moving, slower moving, smaller trading ranges. Or just above that is the absolute gamma strike at 55.50. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. And then above that is the call wall at 5,600. That's a strike with the largest net positive gamma. That can be expected to act as resistance. Not doing its job today. SPX is trading above that level. So technically, from a point of view of SPX, it is oversold at this point, trading above the call wall. All right, let's wrap up our view of SPX with a look at a 1 minute chart. Here are the levels that I mentioned before. Upper daily expected move, SPX. Sorry, Anurag, yes, I meant overbought for SPX, Sorry about that. I'd said oversold, my mistake, my bad. I meant overbought, yes. And thank you for pointing that out. All right, so again, SPX trading above the call wall there at 5,600. And technically, according to the way that Spotgamma looks at this, it is overbought. All right, so that is those are the levels in play. For SPX, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes. So I can show SPX levels. There's that call wall, 5,600 call wall. And I'm also showing SPY levels on this chart. Here's the SPY 557 absolute gamma strike call wall. So the S&P 500 is trading above now the SPY call wall and the SPX call wall. Note that level, around that level, acted as support earlier today. And then I also have SPX level, ES levels on this chart. Here's the ES 5650. Just above that, the ES upper daily expected move. I do calculate that independently from the SPX expected move. So now ES is trading up toward the upper weekly expected move. All right, Anurag had asked earlier my procedure for putting these levels on this chart. So let me go through that quickly. And Anurag, you might want to pay close attention and you can rewatch this, of course. It is being recorded. All right, so first of all, I use this Price Lines add-on. This is an add-on that's available for purchase in the Bookmap marketplace. All right, so I'm using this, and then I have a spreadsheet that feeds all of this information. Oops. All right, so here's my spreadsheet. Whoops, let me put this back. All right, so here's my spreadsheet. Let me open up let me show you where this data comes from. So first of all, Thinkorswim, I've talked about the expected moves. This comes from the weekly expected moves come from a think script that I have that I got from somebody else that I cannot share. That did come from somebody else. You can also just get this information from an options chain. This is where I get the daily expected move over here from an options chain. All right, so that's where the expected moves come from. I put those in my spreadsheet. Then let me go to all right, then I use these index levels to fill out. These are all the levels that I put in my spreadsheet. So this is, I'm showing SPY here. SPY 550, large gamma 3, shown over to the right. 554, zero gamma level. 555, volatility trigger. I fill this out. So it does take some time. I do the same thing with SPX. Let me go back to the spreadsheet. And actually, let me wrap this up. Then I get the index relationships a couple of different places. Here's the ES minus SPX offset. Right now it's 54. I had shown my final index relationships at 53. It was closer to 53 this morning. Now it's closer to 54. Here's NQ minus NDX, right around 225. And then for the ES to SPY and NQ to QQQ, I just have a think script here. So I get all these index relationships. From that think script. Let me go back to my spreadsheet. So here you can see I have all just the numbers shown over here in this column, and then this is showing what I'm using to calculate all these levels. So the ES to SPY relationship is 10.1306. So I'm multiplying that number to get this number. Then I've got ES minus SPX. That's SPX 5300 is at ES 5354. All right, so I fill that out. This takes maybe about a half an hour. My morning preparation part of that is filling out this spreadsheet. Then I go to price lines. So I save the spreadsheet. This is pointing to that spreadsheet right there. Oops. All I do is start the server in the morning, refresh the levels, and I'm good to go. All right, Anurag, I hope that answers your question. All right, so let's move on now. Let's move on to wrap up positional analysis by taking a look at gamma notional, and then we'll get to some setups. This is market maker's position on the gamma curve at the beginning of the day. This gives me an indication of the what type of trading range volatility I can expect for the gamma notional market maker's position on the gamma curve at the beginning of the day for the S&P 500 and the NASDAQ. Note all these numbers are positive, indicating for an index that sorry, I was reading reading comments, questions. All right, so this is the gamma notional market maker's position on the gamma curve at the beginning of the day. In a positive gamma environment for an index, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. Note all these numbers are positive, but less positive than yesterday. And yesterday they were less positive than the day before on Monday. But still positive gamma notional. So I would call this kind of mildly positive. I think that the numbers that were shown on Monday for SPX were not correct. It was crazy high. Also, this number, the range for this number is -4 to +4. So again, kind of in the middle of the positive range for SPX. All right, so based on this, my thesis for the day and you know, I did not even talk about NASDAQ. All right, I got distracted. All right, so let's take a look at NASDAQ, then we'll wrap this up. So let's go to NASDAQ. All right, so this is the NQ futures of Bookmap. Let's take a quick look at the underlying index charts. Go to QQQ. Just like the SPY and SPX, QQQ also trading above its call wall at 500. Let's take a look at NDX. And there are a couple of combo levels above and below that. Go to NDX now. So now NDX also trading above its call wall. So all four index products that I look at, SPY, SPX, QQQ, and NDX, price is all above the call walls for all four of those index products. Note earlier today the put wall did act as support, so NDX has gone from the put wall to now above the call wall in a pretty narrow range between the two. All right, let's go back to NASDAQ. So I have my own cloud notes again for the NASDAQ, so I can show QQQ levels, NDX levels. There's the 490 put wall acting as support. Here's the QQQ 500 absolute gamma strike call wall. And we'll talk about setups in a few minutes. All right, so I've already talked about gamma notional. Market maker's position on the gamma curve is positive. Let me wrap up shifts in levels. So for SPX, there were no shifts in levels. For SPY, a bullish hat trick, volatility trigger, put wall, and absolute gamma strike also all shifted higher. And for NDX, put wall and call wall shifted higher. And for QQQ, the volatility trigger and absolute gamma strike shifted higher. So hat trick for SPY, and then two shifts higher in levels for NDX and QQQ, all bullish. So based on that, my thesis for both the NASDAQ and the S&P 500 was bullish today. All right, so horsepower, again, this is what I'm looking at for NASDAQ, and then I'll talk about the hero signals that I'm looking at for options trades in just a moment. All right, so again, gamma notional still positive, but shifted lower. So my thesis for the day was looking for moderate volatility and definitely a directional bias, bullish directional bias. All right, Sky Blue says Spotgamma recommends using the URL from integrations though, and the numbers are different between how you do and what they recommend. All right, let me go back to S&P 500. So yes, Spotgamma does have cloud notes. You can use cloud notes from Spotgamma to show SPX levels only on your bookmap chart, or I believe maybe NDX levels only on your NQ chart. So let's just stick with the S&P 500. The last time I used the Spotgamma cloud notes, it was some time ago, and that only includes SPX levels, and this is set once a day. They use the ES to SPX offset from yesterday. It may change today. So when I'm using my own cloud notes, I have the option of updating that sometime during the day. So I'm showing, in addition to SPX levels, I'm showing SPY levels and also ES levels, all in the same column there in all of my cloud notes. Yeah, it takes a little bit more time, but it is more precise and provides more information. So there's absolutely nothing wrong with using the Spotgamma levels if that's what you want to do. I prefer to do this. Again, it takes more time, but it is more precise and provides more information. All right, so I hope that helps. All right, so let's move on. Let's take a look at some setups now. I'm going to start with the S&P 500. And as always, I'm going to start by taking a look at what options traders have been doing today. This is the hero signal in Bookmap, showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So remember in my introduction when I said that when traders buy and sell puts and calls in SPX and SPY, also XSP and ES futures, market makers take the opposite side of those trades and hedge their delta exposure with ES futures. So this is the index signal for the S&P 500. There are two lines on this chart. The white line is showing price for SPX, and the purple line is the hero signal, HIRO, hedging impact real-time options. And a falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. A rising hero signal indicates they are buying calls and or selling puts. All right, so that is one signal that we can take a look at for the S&P 500. And the other signal is the equity signal. And this is another combined signal. This is showing options trades and market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. And it is bullish. It's pretty much been rising from the open. Whoops. Rising hero signal. Let's just shift to puts and calls. So traders have been buying calls all day, shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to, in this case, buy stock to hedge their delta exposure. All right, let's go back to the S&P 500 signal. All All right, so this is showing that traders have been buying calls in the index products as well as selling puts. That's shown by the rising blue line. Selling puts, rising blue line, buying calls, shown by the rising orange line. Some consolidation around the 5,600 call wall. And prices broken out above that around noon or so, 12:15. All right, let's take a look at Bookmap. I'm going to zoom in on this chart. Let's go to Bookmap. All right, so keep in mind a bullish thesis for today. Traders were taking positive delta positions from the open. Let's take a look. Actually, let me zoom in just a little bit. Yeah, that's a little bit too much. So let's take a look at the clues here in Bookmap. First of all, the volume dots here in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. Price moves down to these levels that I talked about, acting as support, the 557 absolute gamma strike call wall. Sellers are exhausted. Aggressive buyers come in. Price is above VWAP. A little bit of a pullback right around 11. Again to that 557, 55.88 level around VWAP. That's a light blue line. Once again, sellers are exhausted. Aggressive buyers start to come in, shown by the green volume dots, and now price continues to grind higher. In the subchart, I have cumulative volume delta. Here that's shown by the rising dark blue line. Also stop orders, showing this buy stop orders helping to fuel the move higher. That's pretty typical. That's shown by the rising yellow line, also the on-chart indicators. Large traders have been fading this move with iceberg orders. That's shown by the light blue line. That's pretty typical of large traders. Large traders selling with iceberg orders they use to hide their size. So far, they are not having much impact on the market. All right, so that's the S&P 500. Best entry point for long, right around 11 a.m. with a retest of the 557, 55, 88 level in VWAP. Let's go back to Hero. So we're looking at the index signal now. And note, actually before the little bit of a move up until about 10:15, flow alert, getting your attention. A little bit of a pullback in both the put and call line. Lines start rising, another flow alert comes in, and now again, blue line, orange line moving in the same direction. So Anurag says, so when a trader buys a call, market makers sell a call. Yes, the market makers buy stock. All of that action results in a rising hero signal. Yes. All right, so notice that in this case, in this chart for the index chart, call line, blue line, pretty much moving in the same direction. Up, down a little bit, then up again for a nice long entry right around 11 a.m. And again, flow alerts coming in for both moves higher. All right, let's take a look at the equity signal. And for the equity signal, traders have been buying calls since really about 9:35, 9:40. Rising orange line continues to rise. All right, so that's the SP 500. Long entry again around 11 a.m. in line with a bullish thesis based on the shifts higher in the levels for SPY, NDX, and QQQ. All right, let's move on to NASDAQ now. Take a look at the NASDAQ signal. And I'm not sure how to pronounce your name. Actian Bull. Isn't a rising put line bearish? No. A rising, let's go back to the, actually we'll go back to the, thank you, Anurag. Rising put line is bullish, yes. So the direction of the line, the slope of the lines, is in terms of options delta. So a rising orange line indicates traders are buying calls, and a rising blue line indicates they're selling puts. So both are bullish. With rising lines, that's bullish. And here in this case, a falling blue line indicates they are buying puts, and a falling orange line indicates selling calls. So those are all negative delta. All right, so again, just look at this in terms of options delta. And you can also see the total notional value for the day. Both numbers are positive. Positive delta notional value. All right, let's move on to NASDAQ. And you're welcome. All right, so NASDAQ traders in the, actually, let me show you quickly what this signal is. I'm going to go back to close full screen. So just like the SP 500, there are two signals that we can take a look at. This is the index signal showing options trades, market maker hedging activity for a combined signal of NDX and QQQ. And horsepower QQQ is typically the much more important portion of this signal. NDX is pretty thin. So this is the index signal, combined signal again for index QQQ. Then there's also an equity signal that we can look at for the NASDAQ. And this is the MAG 7 signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And these 7 stocks make a very large component of the NASDAQ 100 and often drive price for the NASDAQ 100 and the S&P 500. All right, so let's go back to full screen. Start with the index signal. So traders, in this case, have been buying calls since about the first 5-10 minutes. They take the foot off of the gas for a little bit. Price consolidates. Then around 11, they start to buy calls again. Price moves higher. Go to the index. They are also buying puts, shown by the negative notional value and the slightly falling put line. But the call buyer is much more aggressive today, much larger notional value, and call buyers definitely driving price. Let's go to the MAG 7 signal. And again, traders buying calls, and in this case, selling puts. Call buyers much more aggressive, driving price higher for that pullback entry right around 11 a.m. So let's go take a look at NQ now. All right, so for NASDAQ, here's that pullback entry to the NDX 20,490 put wall, actually a little bit lower than the previous low. And aggressive sellers are exhausted. Aggressive buyers start to come in, and NASDAQ starts to grind higher. Note in the same case of the S&P 500, large traders fading this move with iceberg orders, but aggressive buyers shown by the rising cumulative volume delta, dark blue line, as well as buy stop orders fuel the move higher. More aggressive buyers come in as traders continue to buy calls in both the index products as well as the Mag 7 stocks. All right, so that is the S&P 500 and NASDAQ. Let's move on. Let's take a look at some stocks. First, I want to take a look at Apple. Note the rising cumulative volume delta shown by the dark blue line on the subchart, all the green volume dots. A lot of aggressive buyers buying Apple today. Let's see what options traders have been doing. Let's go to Apple. Note the rising orange line. Traders have been buying calls. Let's zoom in on this just a bit. Flow alert comes in the morning. So I see the flow alert. I look at the rising orange line, looking for a long entry. Now, one thing that would cause me to hesitate is this call wall here. Call wall, 230 call wall, key gamma strike. But price breaches that level. Looks like it retests that level as traders continue to buy calls. And they don't take their foot off the gas until about 10:05. Note the call buying abruptly stops and price starts to consolidate. And then a few minutes later, they do start buying puts. So net for the day shown here in this portion of the chart, traders have been buying calls and buying puts. Call buyers much more aggressive, driving price higher in the morning, and then abruptly taking their foot off the gas and price consolidates. When they zoom out, so price, note the sharply rising orange line, looks like a kind of a large block order there, large institutional order. So call buyers definitely driving price. Definitely driving price for Apple today. Let's take a look at Bookmap. One other thing to mention, this call wall breach at 230. Call wall breach 230. Here's that pullback. First pullback. Second pullback. And when price breaches the call wall, and for stocks, well, first of all, for a stock, Spotgamma assumes that traders are long calls, market makers are short calls. Hence, well, so they're short calls. When price moves above that call wall, calls are concentrated at the call wall. So market makers short calls go deeper on the money. Their delta becomes more negative, so they have to continue to buy stock to hedge their delta exposure. And there have been, again, a couple of deep pullbacks, good for long entries, as traders have resumed buying calls. Market makers have to continue to buy calls, and price moves higher. All right, so that's Apple. Let's take a look at AMD. Actinium Bull, yeah, I'll take a look at Dell in just a couple of minutes. Here's AMD. I did post a setup for AMD yesterday. It was a bearish setup yesterday. And I still have this on here from yesterday. 180 call wall acted as resistance for a good short setup in AMD. I did post that in Twitter and in Discord. And today there was a call wall breach of that level. Price sliced right through that level as aggressive buyers and call buyers move price higher. Let's take a look and see what options traders are doing. So that's Apple. Go on to AMD. Pretty similar picture. We'll zoom in on this. Flow alert, actually the more meaningful flow alert, comes in a little bit later. Traders start buying calls, maybe in response to price moving higher, but sharply, aggressively buying calls. Call wall breach again. Those calls, market makers short calls, go deeper in the money. Their delta becomes more negative. They have to continue to buy calls. Call line, orange line, blue line, put line moving in the same direction. And then right around 10:30, 10:15, shift, or 10:25, blue line, orange line, shifts down, price consolidates, moves down, and now the orange line, blue line level off and price consolidates. So aggressive call buyers and put sellers move price higher in the morning up until about 10:25, 10:30. And then they shift to call sellers and put buyers. Price moves down. And still consolidates as the orange line and blue line, call line, put line have leveled off. Let's go back to Bookmap. Aggressive call buyers coming in a few minutes after the open. We saw the call line started to increase a few minutes after the cash open. Abruptly take their foot off the gas. Price moves down. Now consolidating as the orange line, blue line are leveled off. And note also there have been quite a few aggressive buyers early in the morning, shown by all the green volume dots, and now more aggressive sellers are coming in, shown by more and more magenta volume dots as cumulative volume delta has leveled off. Let's take a look at Amazon. Amazon is the 200 call wall key gamma strike. That level continues to act as resistance. Let's see what options traders have been doing in Amazon. Zoom in on this. So the 200 call wall key gamma strike has been solid resistance for Amazon for several days now. There's the 200 call wall key gamma strike. Then starting right around 10:20, traders started aggressively selling calls. Price moves lower. And now as the call sellers have taken the foot off the gas, Amazon trying to move higher. All right, Sky Blue asks, are these individual buyers and sellers of AMD, Amazon, etc., making up the buyers and sellers in NQ? So there is an arbitrage relationship. So first of all, Amazon and AMD, other large cap tech stocks, are part of the NASDAQ 100, the NDX index. Again, NDX is the primary index. QQQ is the ETF version of that index. And then there's an arbitrage relationship between NDX, QQQ, and NQ, and also this options relationship that I've talked about as well. So let's just keep this simple now and just focus on this single stock. So now just focusing on a single stock, I'm looking what options traders and market makers are doing in Apple, AMD, and Amazon, and how that is driving price for that single stock. All right, rainy days. Hello, welcome. Glad you're here. M. Zoltan, you're welcome. Welcome. Glad you're here as well. Rainy days ask, what setups are you typically looking for when many tickers are bumping up against their call walls? All right, so let's say, well, it depends on the underlying and also the kind of the condition of the market. So in this market, a very bullish market, I would not be looking to, as price test a call wall typically, just in general, not be looking to buy a put. I would not be looking to buy a put in this market unless you're trading further out in time, looking to hedge a portfolio. If you're looking for a short-term trade, I would be looking to buy a put spread or sell a call spread. In that case, all you're saying is price is not going to move above this level. So that would be a good setup for Amazon here, for example. Again, buying a put spread, selling a call spread. In that case, all you're doing is saying price is not going to move above this level. As long as it stays below this level, I'm going to make a profit on that trade. But I don't think there's definitely enough movement on the downside for to buy a put yet. Maybe after options expiration next Friday, the July expiration, that may free up a little bit of, remove a little bit of this positive gamma that's supporting the market, and maybe a little bit more volatility. Maybe traders start to take profits, or there could be some reaction after CPI. But today I'm not looking to buy a put. All right, let's move on. So there's Amazon, again, the call wall, 200 call wall, absolute gamma strike acting as solid resistance for Amazon. Next stock I want to take a look at is NVIDIA. Well, actually, I had CrowdStrike. I did mention that. Pretty bullish day, bearish day here in CrowdStrike. So actually, I just take that back. Actually, buying a put might have been a good trade here in CrowdStrike, but generally, it's not in line with a lot of other stocks. So let's take a quick look and see what options traders have been doing at CrowdStrike. So in CrowdStrike, they have been selling calls and buying puts. Price did break below the put wall, so CrowdStrike definitely not moving in line with most of the rest of the market. So rainy days, you're welcome. Rainy Day says, I felt paralyzed today. Yeah, so if you're looking for shorts, the way to trade this was definitely long in most cases, except for CrowdStrike here. All right, so definitely if you wanted to buy a put, that puts in CrowdStrike, pretty expensive. It's a pretty high price stock. Maybe better to buy a put spread or sell a call spread, especially not knowing the magnitude of the move here. All right, let's take a look at NVIDIA. Call buyers in NVIDIA, shown by the rising orange line, deep pullback entries. Steady uptrend. So now the call buyers have slowed down, taking their foot off the gas, and price is starting to consolidate. Note, NVIDIA is trading well above its call wall. So that same call wall dynamic plays for NVIDIA as well. Market makers have to continue to buy calls as their delta exposure becomes more negative. A couple of flow alerts, deep pullbacks, price moves higher. Let's take a look at Bookmap. Go on to NVIDIA. Looks like 135 acting as resistance. This is the heat map in Bookmap showing a history of the limit orders. Those are limit sell orders, act as a magnet for price. Deep pullbacks marked by this market pulse price change indicator in the subchart here. These are good. This market pulse price change indicator is a very good confirmation of deep pullback entries. All right, so that's in NVIDIA. Then finally, Tesla. Initially in the morning, Tesla was bearish. Traders were selling calls right around 10:30, 10:35. They stopped selling calls, started buying calls. NVIDIA started to, Tesla started to move higher, continuing its strong move in the last few days. Let's go take a look at Bookmap. Go to Tesla. Another bullish day in Tesla. Call sellers driving price down in the morning. Call buyers come in right around 10:35, 10:30. Price moves higher. Pullback entries again marked by the market pulse price change indicator. Helping to confirm the deep pullbacks. Sky Blue asks, why doesn't DXFeed sell data to us directly, or do they? I don't know. Can we get cheaper data? I don't know. I use DXFeed. So you can, I would direct that question to Bookmap or maybe DXFeed directly. All right. There was a request to look at Dell. I don't have a Dell in Bookmap. We can take a look in Hero here, see what options traders doing. Let's zoom in on this. So in the morning, it looks like call sellers, call buyers were driving price. Call sellers on the way down right around 9:40. Call buyers start to come in, take the foot off the gas. Price consolidates. So net for the day, traders are taking negative delta options positions in Dell. They've been selling calls and buying puts. And there you go, Actium Bull. All right, last call for stocks. Is anyone else? Let's take a look at the... Hey, you're welcome. All right, circling back to the S&P 500. Looks like price consolidating. This is the index signal. Call signal leveling off. Put signal leveling off, price consolidating. Take a look at the equity signal. And now the call buyers have taken their foot off the gas. Let's go back to Bookmap. So now it looks like ES is trading just below its upper weekly expected move. Let's check the weekly expected move for SPX. That's at 56.30. So SPX still below its upper weekly expected move. Back to Bookmap, quick check of NASDAQ. All right, Rainy Days wants to take a look at GLD. All right, let's go to Hero. So I don't have GLD in Bookmap. We can take a look in Hero. Not much going on. So it looks like GLD now trading below its call wall at 220, call wall, key gamma strike. Net for the day, traders are buying puts and selling calls. Sky Blue says, I want to clarify, please, when trader buys a call, market makers sell the call to hedge, then market maker buys the same stock. Yes. Does the hero signal blue line represent this action of buying stock? No. No, it does not. Let's go to Apple. Again, the orange line shows traders are buying calls. Market makers sell the calls. They're buying stock to hedge their delta exposure. And the blue line has nothing to do with that. This has to do with calls, and this has to do with puts. So this is showing that traders are also selling puts. Market makers buy the puts. They have to buy stock to hedge their delta exposure. All right, so this is just showing with more clarity all right, the total signal is purple, and it sums calls and puts into one line. So a rising purple line indicates traders are taking positive delta positions. Market makers are taking negative delta positions, and they have to buy stock to hedge their delta exposure. All right, OM asks, is SP provides these signals as feed, any way to test for accumulation and buying, selling of puts and calls? I'm sorry, I don't understand your question, and I assume you're talking about Spotgamma. Sorry, again, I don't understand your question. Let me see if I can interpret that. So what I've done now is I've turned on the next expiry in the S&P 500 index signal. So this is showing calls and puts that expire today. So it looks like maybe about 60% of this total signal is options that expire today. So we can say that about 2 billion of this delta notional value is calls that expire further out in time than today. So there should be some accumulation of these calls and puts further out in time. And that is reflected in the shifts in levels So that's reflected, first of all, in the shift in open interest. And that data, that open interest data, comes out once a day, sometime overnight. Spotgamma takes that information and adjusts the levels, the call wall, the put wall, absolute gamma strike, based on those shifts in levels. And that's based on the new open interest that comes out once a day. So this, the teal line there, that's making up about 60% of this, will have no impact on open interest. But the purple line, the difference between the two, options that expire further out in time, will have an impact. And Jerry says, interesting that VIX is going up when the market is so bullish. Yeah, I noticed that too. VIX is up. All right, rainy days, you're welcome. All right, my time is up. I want to thank you, everyone, for watching. Thank you very much for your questions and comments. Everyone, remember, CPI data comes out tomorrow, and then PPI data and Michigan consumer sentiment on Friday. We'll talk about it on Friday afternoon. Have a great afternoon. Again, thanks for watching. Thanks for your questions and comments, and I will see you on Friday.